All right, everybody. Hey, welcome to our next city on the Note Nation Top 40 Tour. We're honored to have you guys. We roll into the Big Easy of New Orleans, Louisiana tonight. As always, guys, we have a variety of different investors join us, not only those that are living locally, but also live nationally, invest there in the New Orleans market. We've been invested in New Orleans for a while now and understand the market. It has its ups and downs and peaks and valleys like every other market out there. But if you guys would love to check out the other cities that we've featured on the Note Nation Top 40 Tour, you can always go to notenationtop40.com. Take a look at the replays. You can watch those. You can also see the remaining cities that we have as we roll into the last 20% of our national virtual tour over the next week. Tonight, we'll be discussing the statistics and numbers of the New Orleans market and Louisiana. We'll talk about future opportunities, where to look for those deals, and how to get started out there. But if you don't know who I am, everybody, I am Scott Carson. I'm known across the country as the Note Guy. I've been an active real estate investor since 2002. I'm the CEO of WeCloseNotes.com, which is our main website you can go to. You can also realize that, hey, we've done this a lot of times. We've purchased over $500 million in debt for our own portfolio and helped other investors out there to purchase over $1 billion in debt. I've been teaching investors how to tap into distressed markets since 2004. I am also the host of the podcast, The Note Close Show, where you can listen to it anywhere that you listen to podcasts. You can also check it out on our YouTube channel at WeCloseNotes.tv as well. I invest all across the country, over 30 markets, but Austin, Texas is home, ladies and gentlemen. I was in New Orleans actually in February for an event. Really enjoyed it. Love there. I think I had gumbo with every meal because I love the food, love the people, and really enjoyed my time there and love going back there, getting some debate, getting some good chicory coffee and enjoying just the energy of New Orleans and the city that's going, just always great stuff going on there. So, but anyway, our mission has always been at We Close Notes to help investors to accomplish their goals and dreams and increase their wealth through debt investing. We are a big believer that by becoming the bank, you hold all the keys to the proverbial real estate market. And why am I doing this? Variety of reasons, everybody. I love helping investors accomplish their dreams and goals. I've been an investor for a while, so I love helping other people do the same thing. I believe there's plenty of deals out there if you're willing to take action and roll up your sleeves and get to work, especially with what's going on right now in the market. I love helping people solve problems. God knows we've got enough people that need some solutions out there, and I'm a big fan of doing that. I think it's my favorite love language is in the helping people solve problems. I will tell you this, that I do believe this is the opportunity. It's part of the reason why I'm doing it. That I believe if you're taking action now between the end of the year, you're going to be set up for 2021 to be an amazing year, even 2020 to be an awesome year if you know how to capitalize and get rocking and rolling. I was once a distressed borrower, so I'm also very passionate about helping people understand the options to borrowers out there, tenants out there. There's a lot of people running scared because they don't know their options, and I empathize with those out there because I think one of the most important things is we all have the dream of doing something big. And sometimes that dream does turn into a bit of a nightmare. And I'm a big believer that there's nothing greater than helping someone overcome an obstacle or achieve a goal or dream that they thought was once impossible. And a lot of Americans need some help right now. And we've set a big goal for ourselves. We want to help over 1,000 investors in the next 12 months tap into the markets. And would love for you guys, if you're watching this live or catching this on the replay, ask questions. Let us know where you're at. Love to find out what your focus is and what's going on and see if we can't help you take your business to a whole different level. So anyway, let's dive into what we're going to talk about. So where are the opportunities? Let's first start off, where are the opportunities? Where should we be looking? And I'm going to tell you right now, it's kind of a funny thing. And they're everywhere, ladies and gentlemen. Literally everywhere out there. If you know where to look, what rocks to knock over, there are deals everywhere out there for everybody. Enough deals to go around, all right? Whether you're looking for self-storage or multifamily, single-family homes, mobile home parks, affordable housing, office space, or even hotels, motels, there are opportunities everywhere. And the beautiful thing is what's going on right now is such an opportunity. It doesn't matter how old or how young you are, how experienced you are, what color your skin is, how much money you have in the bank does not dictate your value right now. If you're a business owner, great. If you're a failed business owner, hey, no problem. Hard work. Because the opportunities exist today if you're willing to go to work and make some things happen. If you're willing to do 5% of what others aren't willing to do, you're going to be a whole lot exponentially more valuable. And the thing I want to ask you, if we're going to end tonight, is how big of a piece of the pie do you want? You want small crumbs? You want some bigger crumbs? There's opportunities out there, no matter what your long-term goal is, maybe. And we've all got goals. It's great to have goals. It's one of the things that should be driving us is our why. Maybe your why is to retire, drinking more margaritas and pina coladas on the beach. That's great. Maybe it's to spend more time with your spouse, to have him or her quit their job or come home and spend more time with you guys. Maybe it's to put your kids through college. God knows that's a bit of a weird thing right now. Maybe it's to, hey, mom and dad, thank you for working so hard. It's time for you to enjoy retirement. Maybe you want to just get the heck out of Dodge and travel some more and do some interesting things. And instead of staycations, actually take a vacation. Great. I know I am. That's one of the big things we love to do is travel. Maybe it's to just upgrade your house, your digs, where you live, what you call home. Maybe it's just to add more deals to your bottom line. And that's totally fine. Whatever your goal is long-term, we all know one thing. It takes money to make money. And a lot of people, they let the fact of what their balance is in their checking account or their lack of balance affect them from taking action to going to, oh, I can't do that stuff. I can't be a real estate investor because I don't have any money. And I'm here to tell you tonight, ladies and gentlemen, you can do this with one of the things that we're going to be talking about. There's never been a better opportunity, and the banks are looking for people to take over their assets, to buy their assets. There are investors out there who have money that want you to use their money to go make some things happen. All right. So let's dive into what the national numbers say. Is it a positive thing? Is it negative? Well, it's somewhat depends on how you take a look at things. Okay. The national numbers say that we're currently at 11.1% unemployment rate through June. July's numbers have not come out yet. So basically 1 out of 9 people are unemployed. Okay. We had over 50 million people have filed for unemployment benefits. Not all of them have gotten it. Okay. Big chunk have not gotten it. The stimulus packages that they're putting together aren't going to save anybody. They're just a Band-Aid, and in bad cases, a very bad Band-Aid in some places, okay? We expect 52% of businesses, small businesses expect to fail, but what's making the headlines is big businesses, people closing their stores, closing locations, hundreds, thousands of people being laid off of work as well. It's going to continue to get worse. Before this all happened, we had 1 out of 10 homeowners was already struggling to stay current. That's right. January, February, 1 out of 10 borrowers was already 30 days behind on their mortgage. All right. Now, you look now, 1 out of 12 borrowers is at least 90 days behind. Okay. We have a national delinquency rate of 7.76 across the board. That represents roughly 4.1 million Americans that are currently in default. Default. 90 days or greater behind their mortgage, ladies and gentlemen. That number is going to get a whole lot worse before it gets a whole lot better. Okay. Now, if you think about what happened 10 years ago, it took us 18 months to get to 1.6 million defaults. We're 6 months into this stupid thing, and we're already 2.5 times that. So it's going to get a lot worse before it gets a whole lot better. And nobody's talking about some of these things that's affected everybody, not just on the residential side, but also on the commercial side. All right. Lenders are bracing for us to see 15 million mortgage defaults. Ouch. That's not a good thing, ladies and gentlemen. Now, if you look at the housing hardship index that's put out by bankrate.com and look to see how Louisiana measures up compared to the rest of the country, Louisiana is by far not the worst, but also not the best either. Louisiana ranks as far as unemployment, 9.7% unemployment rate, which is better than the national unemployment. I was surprised to see that. Looking at the default rate, though, it's 11.12%, okay? 50% higher than the rest of the country in Louisiana, okay? Ouch. Who dat? That'd be the bank knocking on my door, okay? So those two things figured in together puts Louisiana ranked at number 11. Not quite top 10 as the housing hardship index, but knocking on that top 10 door. That's not a good thing if you're a distressed borrower. Now, if you look at the unemployment rate for New Orleans, this is basically it peaked at 19% unemployment, basically almost 20% back in April. Obviously, it's a big chunk of that is the hospitality, the tourism and the bars, things going on in New Orleans. June's number is 12.9. That number is going to probably stay kind of close to that because when you look at the rest of the state, New Orleans is a good, 30% higher than the rest of the state. So hoping it drops down below 10% when the July numbers come out. I hope it's that way. It would be nice to see closer on tap to where the rest of Louisiana is, but I think it's going to be a little bit higher because of the tourism for the most part. Looking at, obviously, people are out of work. They're not paying their mortgages. You're going to have increased foreclosures. Now, New Orleans has one in every basically 3,700 homes is in foreclosure, which is not bad. It's not the highest. It's not the least amount of everything. You look at a couple specific zip codes. The 70126 has one in every basically 1,300 homes. 70125 has one in every basically 2,500 homes is in foreclosure there. Okay. Now looking at comparative to the last couple months, we've seen an increase in auctions. We've seen a decrease in bank-owned homes because of things taking place and being delayed. Looking at the numbers between auction and bank loans, you can see those numbers dropped off the cliff to basically nothing in April, started to climb back up in May, June, and July. The foreclosures are starting to, and auctions are starting to climb back up there in Louisiana. Foreclosures across the board really had a zero dip in April, and then of course you see May was a little bit, in June, July is back up to not quite what it was before, but we're getting closer to that. The disturbing thing is that New Orleans, okay, and Orleans County have a double foreclosure rate than Louisiana and the rest of the national average. That's the thing. You're going to see more stuff in Louisiana and New Orleans primarily than you will see in other parts of the country. Now, looking at what's going on in the rest of the United States there, this is a heat map kind of talking about the dark green is where there's been statewide moratoriums. Doesn't matter what your state implemented when to begin with, because basically it's coming to an end. Louisiana, hey, evictions have resumed. It's getting worse out there. There are a ton of people facing evictions, and we all know Louisiana is a little bit different, where a judge can give you 24 hours once the court ruling goes through on evictions, and they're expecting disasters out there. Now, the thing has been nice is executive order by President Trump went in and basically said, if you're living with a government mortgage, it's going to be delayed for foreclosure. Foreclosure starting until August 31st. If you're renting a house that is also government security loan back, it's been delayed. Can't start until August 31st. And that's a good thing. All right. But August 31st is just a few weeks away. All right. And it's going to get even uglier out there. Now, looking at what's taking place, Louisiana is only roughly has been one of the slowest starting states to start the foreclosure process like it was beforehand. It's only 1% of what it was beforehand. It's because Louisiana's a little bit longer foreclosure process, okay? Now, are we going to see this big tsunami of foreclosures as more mortgages sink underwater, as people owe more on their houses, they continue to stay off of work? Of course we're going to see more. But how soon are they going to hit? And what type of loans are defaulting, okay? Well, the overwhelmingly largest percentage of the residential loans that are defaulting falls in the FHA category. The FHA loan is not, I won't say a subprime loan, but you're getting a borrower in, it's not really credit based. And you're getting somebody that's supposed to pay 3.5% down and pay some closing costs. Well, what's happened is the bigger banks have gotten very fat in this loan product because they've been donating the 3.5% down and paying up to 10 grand in closing costs. Bank of America, it was one of their main programs over the last 12 months. That's why you see a lot of defaults. Is that $200,000 or less is the prime FHA, first-time home buyer associations that are basically, they've been laid off of work or reduced. They're the ones that are struggling. And you see 10% roughly of all the FHA loans are in default compared to the conventional loans at 3.16. If your VA and the other loans are somewhere in the middle in there, okay? Now, obviously, people are like, oh, hey, well, go get a forbearance agreement. The banks have been willing to do this for a while, okay? Right now, they say there's roughly around somewhere between 4.6, 4.7 million homeowners with forbearance agreements. MBA says also there's probably another 4 million people that should be on a forbearance agreement that have not called their lender to negotiate one. So it's like a whole secondary wave that's going to kind of crush a lot of people. 8 million potential borrowers that are in forbearance or need to be in forbearance agreements, ladies and gentlemen. Now, is that good news or bad news? It all depends on which side of the cookie you're on. All right. Louisiana has higher defaults than the national average. Ouch. Okay. So if you're looking for stuff in your backyard, guess what? Louisiana's will be one of those prime states. But does have a longer foreclosure time frame and a short eviction thing. Good, not so bad if you're evicting, but if you've got to foreclose, it can take 540 days with a judicial foreclosure on an FHA product to foreclose in Louisiana. So when you add in the backlog of forbearance agreements, it's going to be a good 12 to 18 to 24 months before you start seeing that big foreclosure market hit New Orleans, okay? Hitting in Louisiana, okay? You're going to see stuff, but it's going to be a bit of a while before that. So let's talk about the commercial debt, because we know commercial's been struggled really difficult there. Their businesses boarded up. people for lease. They expect over half of the small businesses to fail. And it's going to get a whole lot worse out there, especially as numbers climb on pandemic. Commercial's been overpriced for really the last 12 to 24 years. Wall Street and the CMBS guys haven't really been a big player in the market for the most part because they thought the market value was over. And that's not saying they weren't finding deals and financing stuff. But the biggest thing that's going on right now is that we'll get to this, that a lot of the banks have been involved in this, not your big Wall Street guys. So if you look at the asset classes that are struggling in the commercial market, you see obviously lodging, hotels, casinos. The lodging aspect has all been basically 27% default rates. Looking at retail, that's been the next big thing. Your restaurants, bars, that falls in kind of your other aspect of things there, also struggling to survive. And this is the last quarter, second quarter, not this quarter, but those numbers are probably going to get worse out there. Now, looking at the big CMBS markets out there, Louisiana doesn't have one, but it still has roughly somewhere around $300 to $500 million in commercial mortgage-backed security assets that are in trouble. Okay. Now, looking at some of the default numbers across the board, basically 1 in 4 hotel loans are default. They think that number is going to increase to 1 in 3 as things continue on. They think that we're going to see, they know that we have 1 in 5 retail loans in default. We think that number will climb to 1 in 4, if not worse. 15% vacancy rate for retail and restaurant space is going to increase. All right. Office vacancy is set to increase to 20%, if not higher, nationwide, especially in the larger markets. Expect rents to fall, though, another 10.5% to 15% by year end, and that number to roll into next year as well. Now, we talked about the CMBS guys. Yeah, they lost a big chunk of value. They took it in, they got kicked in the shins and the teeth in the first part of March, late part of February, lost over $50 billion in value. But it's not been all of them financing this stuff. It's been a lot of the banks. 12 years ago, CMBS guys financed 64% of it. What's been financed now in the last couple of years, the banks have gotten involved into it. Like, oh, yeah, it's a peak of the market. Let's go ahead and finance some stuff, which I never got. The banks have financed over 53% of the distressed stuff. And that stuff is what's clogging up their books right now, okay? Now, on a commercial loan, a bank is not going to finance 90, 95%. They're going to finance somewhere between 60 and 70%. And they're going to be fine there as long as they stay at that loan to value. Now, we all know that when a bank evaluates a loan, especially with cap rates and income, stuff like that, it doesn't always hit the numbers, okay? Doesn't always hit the numbers, but usually when you have appreciation, it offsets, okay, the fact that the bank went above 70% LTV because the values appreciate. Okay, great. But when you have the opposite working in your favors, vacancy increases, rents dropping, and foreclosures, that's going to drop your values. Well, the bank is now not going to be at 63. They may be at 73. They may not be at 69. They may be at 79, 80%. So what are they going to do? They're going to go to the borrowers and say, listen, I need you to bring 10% and pay down the loan. Otherwise, we're going to foreclose. Now, they may kick the can down the road for 6 months, but at some point, the banks have got to start bringing in capital to offset these losses, to offset this distressed debt. And what do we do as investors? Well, the biggest thing that everybody's talking about, hey, bring some capital to the table, buy some of this distressed debt, work out the loans with the borrowers, or try to reposition the property. We'll talk about repositioning the property in a minute here. But they expect the banks to lose somewhere around $48 billion in commercial real estate. That came out in July. I think the number is a whole lot worse than $48 billion that the banks are going to lose in commercial real estate loans. It's going to be a lot worse because if you look at what's going on, that's just the starting point. Your bigger banks, and actually all your banks, have to file quarterly reports with the FDIC. And if you look at what Bank of America announced just a few days ago, they announced that they're setting aside billions of dollars to help offset their debts, $5.1 billion to be precise, but it's actually a lot worse than that. Okay, you look at the big four banks announced they're expecting a lot of bad things happening. They're huge, widespread loan deferrals. Okay. Largest banks report at least $151 billion in loans with payments in deferral at mid-year. They've deferred payments for a while, and that's the four biggest: JP Morgan Chase, B of A, Citi, Wells. Okay, looking at what's going on, they're set aside $32 billion for loan losses in the second quarter, close to a record. That's not a record you want to have right now. That's why I think the opportunity here is banks need to get cash in. They need to sell off some of this debt, and they're going to already starting to offer some stuff up to make up for their losses. Okay, when you look at how each bank is struggling, Wells Fargo, 12% of their first liens, 10% of their secondary liens, 9% of JP Morgan's real estate portfolio was subject to deferrals. That's nearly 3/4 of the total $28.3 billion in consumer loans in deferral out there. Wells Fargo, $44.2 billion in consumer loans at mid-year. Okay, Citi, $20 billion. B of A, 28.5. The United States is on sales, ladies and gentlemen. How much do you want to buy? All right. How much are you want to buy? Now, the question everybody asks me when they see this, I'm like, okay, Scott, where are the opportunities? Is this going to be for the foreclosures? No, you're going to have to, foreclosure and REOs, you'd have to wait 12 to 24 months to see those. That just doesn't make sense right now. The banks aren't going to sell stuff off immediately, especially on the residential side. They've got, especially on the government-backed stuff, they got stuff that they can kick out for a while, right? Fix and flips, that doesn't make a lot of sense either, because a lot of the mezzanine lenders, the hard money lenders have pulled their capital back, or they're tightening up their lending restrictions. They don't want to be lending that much stuff out because their investors are pulling the capital back. Rentals, heck no, I don't want to be in the rental market right now, deal with all that toilets, tenants, and evictions and trash outs. No, that doesn't make sense either. Especially the short-term Airbnb, when you look at what the CEO of Airbnb said, they lost 6 years of growth in 6 weeks. That's not a good time to be. The real opportunities, as we've said with this before, lie in the debt game, buying the distressed debt, becoming the bank, and then working it out in some sort of fashion. And you're going to start seeing residential loans, especially that non-government-backed security stuff, the debt being for sale in the fourth quarter. The banks have had 6 months to evaluate their borrowers. Who's good, who's bad, who's naughty, who's nice. Let's keep the nice, get rid of the naughty. You're going to start seeing that in the fourth quarter as they want to get it off their books so they don't have to deal with it next year and they don't have to be the bad guy. Because banks do not like bad publicity, okay? Looking at the commercial side, we're already starting to see more deals coming across people's desks this quarter than we've seen in the last 2 to 3 years. Already seeing opportunities out there. Look at some of the different exchanges that I track. I'm like, whoa, there's a lot of stuff's popping up there. Talk to my buddies in Miami and California and New York and LA, and they're like, my gosh, Scott, we're getting a lot of stuff sent to us that we're evaluating right now and underwriting. It's going to be a bonkers for deals if you're interested. Okay. So the biggest opportunity, though, isn't going to be those big $5, $10, $15 million portfolios or assets. The biggest opportunity is going to be the smaller commercial asset play, the $5 million or less, specifically the $2.5 million in value, because that's the stuff that's clogging up the bank's arteries. Worse than my grandmother's fried chicken, everybody. Okay? It's really clogging up because they finance a bunch of this stuff. This is stuff that's being the most impacted. The mom and pop investors out there that don't have the capital to bring it to the table. It's an opportunity for you and me to step in, pick this stuff up at a big discount, and then be able to work with the borrowers to say, listen, okay, you couldn't pay for 6 months. Can you start paying something now? Can we work in a gradual recovery for 6 months? Okay, that's where all the opportunities lie. That's what we saw 12 years ago with all the banks. They had all of this stuff, the lower value than 1 million or less loans that they were wanting to get off their books as best they can. We talked about being able to pivot. You might need to pivot the asset. You might need to take in a hotel and turn it into apartments. Like we see this being happening not only here, but with some of our students like Garrison Gilbert in Pennsylvania, Maryland, he's doing that. Taking office space and converting it to self-storage facility like our buddy's doing in Denver here. Took 110 units and turned it into an office space. 110 office space and turned it into self-storage space in downtown Denver that needed it. You're gonna have to get creative a little bit on a variety of things out there. So are there banks in trouble? Well, hell yeah, we know there's banks in trouble. Now, one of the things that we chart on a quarterly basis when we look at numbers is a service called Bauer Financial. They provide a quarterly list as the banks file their quarterly reports, and it gives us numbers to track it. Who's got distressed debt? Who's got stuff in trouble? Who's got what percentage of their portfolio is struggling? Okay. Now, we all know that there are thousands of banks lending in Louisiana. There are thousands of banks out there. One of the things that we track is banks that have 5 branches or more. And if you narrow it down by those that have their main office location, or they call basically Louisiana home, you can see the numbers. There's basically 66 banks with their main office in Louisiana that have 5 or more locations. Okay. And looking at what they have combined, they have $604 million in 90 plus defaults. That's $604 million in loans, 90 plus defaults. And they have an additional $419 million as of June. That was in a 30 to 89 day default rate. Well, I'll tell you right now, July, August, we come to the end of September, it's going to be over $1 billion in distressed debt in just those 66 banks. Now, average, it's basically about 8.3% of the total bank's total portfolio is in past 90 days past due. That's not a good place to be, okay? And you look at what part of that is in single-family loans, roughly, it falls right on track. 25% is roughly in single-family resident loans and defaults. The other 75% is commercial loans. Now, the banks that are struggling the most out there, you might be a little surprised, but Iberia Bank, 178 million and 90 plus defaults out there combined in their portfolio right now. That's going to get worse, okay? We've bought from Iberia Bank, negotiated with them before. They'll sell commercial loans off. I don't think we bought residential loans from before, but they will sell off commercial loans. Bank of Louisiana, oh my gosh, 34% of their portfolio is 90 plus day defaults. They're a 1-star ranking, okay? You can go to 0 stars, okay? You got to almost be out of business to be a 0-star, but they're a 1-star ranking, one of the worst ranked banks out there right now because of defaults, lack of capital. What does that mean for you and me, ladies and gentlemen? That means it breeds opportunity for you and me if you know how to tap in and look at what they've got and really do some great good. So why would you want to buy this distressed debt? Well, people ask me that all the time. The first most obvious thing is you want to act now. So you can start buying this debt now, start controlling these assets versus waiting around and fighting everybody else at the foreclosure auctions. You don't want to deal with that. You want to be as close to the source as possible because you get the best discounts. You also, a couple big things, depending on where it is in location and value, foreclosure time frame, values, condition of the property, you can get huge discounts off of current value. You can pick up something at a cheaper price than you're ever going to see trying to buy a single family home off the MLS or from a wholesaler, okay? You can purchase a debt and control the asset for somewhere between a 30 and 70% off discount, at least that. We're seeing hotel debt sell for roughly in the mid-20s of as-is value, all right? The strategies include loan reinstatement, modification, short sales, short payoffs, foreclosures, loan sales, whole variety of different things that you can do with that loan and that debt. Without you having to do the work, you can actually do a lot in keeping the borrowers in place if you need to. Or if you need to, hey, you hire an attorney and go the legal route. Take over the note and try to turn it into a reperforming note for cash flow. Or if you want to add it to your asset plan, take over the property, you can do that as well too for you. Do what you want with it. Other advantages of note investing, I think you guys will like this. I've seen so many investors over the years spend so much in thousands and thousands and thousands of dollars in direct mail marketing, postcards, yellow letters, bandit signs. There's nothing wrong with that, except I think it's very inefficient in today's market. In the debt space, we don't waste our money with that, okay? We don't mail postcards, letters, yellow letters, whatever. We don't do that. What we do is it's the 21st century. We jump on LinkedIn, we send emails, or we pick up the phone and dial for dollars to talk to asset managers because these guys and gals control the bank's futures, and they aren't going to be checking their email for your postcard, okay? They're often in a different state or different location, so they're not going to look for your bandit sign. And the beautiful thing about this when you're dealing with a bank, it's just not one asset most of the time. Usually that connection at Iberia Bank leads to tons of deals. It leads to deals on a regular basis from one connection. And the beautiful thing, guys and gals, they're going to send you a list that you can cherry pick for your own portfolio. If there's nothing on that you like, guess what? If you know somebody else, you can wholesale it to somebody else. You can flip it to somebody else. If you want to buy in bulk, great, buy in bulk. You'll get better pricing that way. You can do this with residential or commercial assets. Now, I'm going to make a big disclaimer. You're not going to call Bank of America, Chase, Citi, Wells Fargo, and buy a portfolio of residential notes from those guys. They're not going to sell you a portfolio less than $50 million. But that doesn't mean there aren't other banks out there that have stuff in their books they want to get rid of, okay? Now, you can raise capital from other investors to fund the purchase or use your own capital. I prefer to use other people's money. I think it's the smartest thing to do. If you don't have capital, don't sit here, well, shucks, Scott, I'm going to just go back to eating my gumbo. Okay? No, look, there's plenty of investors out there. When you see deals like what we're going to be talking about and what we see, guess what? Good deals find money, all right? If you think about the fact that there were at a peak 15 million homeowners underwater in 2010, If you could go back in time 10 years, what would you do as a real estate investor? Buy more assets, right? Because real estate was a whole lot cheaper 10 years ago. Same thing. You have that opportunity now. If you could turn back time, somewhere Cher is saying, if I could turn back time, okay? You have the opportunity. History is repeating itself right now, ladies and gentlemen, for you to do something with it. It's up to you. How big of a crust do you want? How big of a crumbs do you want out there? Now, there are investors out there. Yes, there's plenty of investors out there. There's over $9 trillion in retirement funds sitting out there waiting for somebody to pick up the phone and give them a phone call, spread over IRAs and 401ks and a variety of accounts. Now, looking in just New Orleans, you can see, we can identify, actually, you'll find this interesting, that there are 9,000 investors in New Orleans with an IRA in the area there. That's New Orleans, not just Louisiana. Remember, it's a whole lot bigger. But just in New Orleans, 9,000 investors with an IRA. And out of that, there is roughly 6,000 of them that have at least 150 grand or more in their accounts. Names, phone numbers, emails, addresses. People that have at least 150 grand or more in their accounts. Now, how many people do you need to talk to find funding for your deals? Not many. Now, if you're still intimidated and don't want to raise capital, guess what? There's a lot of investors in New Orleans. There's over 14,000 people that call themselves real estate investors. So go contact the banks, find the deals, flip the deals to other investors. Put yourself in the middle. That's what I started off doing, was wholesaling notes. Opportunity to do that. If you know what you got and you can go out and market and find for investors, guess what? Boom, either sandwich yourself in for a fee or have somebody help you fund the deal and take the deal down. Okay. The question I always want to ask, do you want to be the banker or do you want to be the borrower, ladies and gentlemen? Look, most investors are in the borrower phase at some point. They've got to borrow money. They're on the wrong side of the payment stream. You're paying money out monthly versus taking it in. Even the landlords, you're in the borrower phase. You're not the banker phase. But there is so much money sitting in the sidelines right now. We've got record amount of savings. People are saving money. They're looking for something to do. They're looking for somebody that they can take their 401k or their IRA or their savings and put it to work and do something good. And the bank always wins, ladies and gentlemen. It always wins. And you can become the bank. You can step into the bank's shoes, have all the same rights, but a lot more flexibility because you understand the local market. Whereas your banks have thousands of assets they're trying to evaluate. They don't always understand what's going on. And you can. Okay. So how do you tap into the tsunami of deal flow, everybody? It's pretty simple. I've been teaching real estate investors about notes since 2010. I've helped thousands of investors purchase their first non-performing note, their first reperforming note. We've done it on residential and commercial deals. We're really proud of the fact that we've helped a lot of people do some amazing things, whether they're looking for cash flow, for passive returns on like performing notes, or they're looking for asset growth, whether it was in cash and buying non-performing notes, getting reperforming, or taking those assets back and adding to the portfolio. You can buy one-offs or in bulk. Yes, the banks will sell you a lot of one-off commercial loans. The residential side, you might need to buy a little bit more in bulk. You're not going to waste the time with the big four like we talked about a minute ago. But there are a lot of trades that we've completed that were 25,000 to 5 million. Somewhere in under 1 million phases where we funded a lot of stuff. And you don't need a lot of money to do this. And the bank does not care about what your credit is. If you're in forbearance agreement, if you've had a foreclosure, short sale in the past, they don't give a rat's ass about that. All they care about is A, can you fund and not be an embarrassment? Do you have a servicing company? Are you abiding? Do you have the right vendors in place to do that? Great. Can you talk it? Can you fund? Okay, help us get it off those books. Okay. And like I said, you don't have to drop thousands of dollars in wasted postage, wasted mail every month. You can do this with emails, LinkedIn, and phone. I know it sounds easy. It takes work. It takes continued work to be basically market. But it's a whole lot easier than linking a bunch of stamps and talking like Elma Flood at the end of the evening because you licked so many stamps. Okay. I don't care whatever your focus is, whether it is apartments or single family homes, or it's say self-storage, or it's office space, or it's hotels, mobile home parks, residential assisted living. Okay. Whatever it is, you can create some phenomenal win-win scenarios in all asset classes, whether you're searching for single family homes and you want to keep people in their houses that way, or you're looking for some higher end stuff, or you're looking for maybe apartments or something like that, that you can really turn some great cash flow in there. there are opportunities everywhere out there if you know where to look and what to do it. Now, you don't have to do it big. You can start off small. All right. Actually, I recommend starting off small and figuring things out before you go big, because you can really screw up if you don't do the right things. But you can start off small, just like Gene started off small. He started off small buying onesie, twosie. A couple years later, after our training and spent some time with him, guess what? Boom. Closed on over 134, 135 deals, raised over $13 million in private capital from somebody that was scared to raise capital. It's given retirement a whole different meaning to him. All right. You look at Laura Blanc, started off like many real estate investors, trying to make something happen in a competitive market out there. Yes, Montrese, you can find notes on mobile homes. Yes, you sure can, buddy. I said mobile home parks and mobile homes. Yes. Laura Blanc started off like many investors, trying to make things happen, wholesaling, subject to deals, options, slight rehabs in a competitive market like Austin, because that's where she called home. We taught her the note business. She learned from us in her first 18 months. She closed on 14, 15 deals. Fast forward, she's closed on over 100 deals and get ready to close on a portfolio of over 100 notes for $4 million, all with other people's money. We're very proud of what Laura has done, and she continues to kick ass and take names. You could be like Keith Collins here out of Ohio. Keith had quite a bit of real estate experience before this in the property, the water development. He worked for city governments. He also did some fix and flips. He was a mayor of a small town. He learned the note business from us and has been rocking and rolling. I got an email from him just recently talking about the fact that 2019 was a very good year. They made over 7 figures because of the note business, and he's licking his chops at what's going on right now in the market too. They've all got experience when they started off. But the beautiful thing is, as I've talked about before, that the bank doesn't care what your experience is. You can do this in the way that we teach it as well. You can get started even if you don't own a house and never bought a house before, like Raphael. He didn't understand a lot of the housing stuff, but he was interested in real estate. So he took our training, he learned the note business, bought a couple assets immediately in his first 2 weeks, bought 2 or 3 more within 30 days, and is off rocking and rolling. Now, he lives in San Diego, and it's an expensive market. That's why he says, it's too damn expensive out here. I don't want to buy a house out here. But what he did was a business owner. He was a business owner out there. He had to lay off 15 of his employees off from his car detailing business because, hey, during the COVID, nobody wants to have somebody wash their car when they're sitting at home. But as Raphael will say, he's glad he learned the note business. He may never open up his business again because the fact is he loves what he's doing now. He understands the note business. There's a whole lot less work being an adult babysitter. And he's like so many other investors. All these, like I said, we've helped so many people out there. And like I said, doesn't matter your experience, doesn't matter your age, your color, whatever it is. If you are coachable, I'd love to add you to the list of successful investors that are going out and doing some big things in the space, really doing some amazing things out there. We help people all across the country, and we continue to help people. And we'd love for you guys to be part of our note family. And how do they do it? Best thing to tell you, the way to do it would be take our one-day training is the kind of the way to start things off. We have a one-day, all intensive, basically. It's like a mini workshop called Note Weekend. We host this once a month, usually the 3rd or 4th Saturday. It's with yours truly. And it's a live training via Zoom like this. We spend all day Saturday, basically from 9 a.m. to 5, 6, 7 p.m. at night, going through the basics of note investing. Our students call it the Cliff Notes version of note investing. You remember those yellow books in college, or if you didn't want to read the book, you could read that book. It's kind of how we design the training. You're not going to learn everything about the note business in one day, but we've designed the training that you're going to walk out at the end of the day a much more educated investor and understand the power of notes and understand the good, the bad, and the ugly when it comes to it. Okay. We live stream this on Saturday via Zoom. The replays are available for you on Sunday. They're included. So if you miss something on Saturday, guess what? You can watch the replays at your own speed. Normally it's $97. We like to say run from 9 to 5 at least. A couple breaks. If you go to noteweekend.com and scroll down, you can see the schedule and the itinerary for the whole day. As I said, we usually do this once a month. We've got one upcoming just a few days out there as well. And if you sign up for it and you've missed it, guess what? We'll send you the replays so you can watch the most recent one and be ready for this next one that rolls around for you guys. Like we said, we do it basically monthly. And it's absolutely one of the best things that we've done this year. We've hosted the class 6 times. Like I said, once a month. It's a great starting point for a lot of investors out there. What will we cover at Note Weekend? We cover a lot. All right. So we don't take a lunch break. We literally take like 30 minutes here, 30 minutes there. Boom, get rocking and rolling. So what do we cover? First thing is how to find deals, how and where to find, what to say, what not to say, the scripts to use, what to say, what not to say. That's the most important thing because nothing else makes sense unless you've got a deal, okay? We'll also dive in and talk to you about how to fund these deals with OPM, other people's money. We'll show you how to find investors nearby where you're located at, in your zip code, in your county, that you can reach out to who are ready to pull the trigger or ready to fund your deal so you don't have to worry about using your own money. We'll talk about the different exit strategies because there's basically 10 plus strategies to make money with notes, especially non-performing and performing. We'll talk about the different vendors that you need to have, and we actually include over 10 hours of additional training on the different vendors and team and what role they serve for you. We'll also discuss the different loan trading platforms. There's some stuff out there. There's not an MLS, but there are some websites you can go to, some exchanges that you can log into, start looking at commercial and residential deals today. What a beautiful thing. If you don't want to call the banks, guess what? You can jump on there and start looking at deals. Also, guys, we'll cover a lot more marketing, so a little bit of legal stuff, what you got to look for if your deal's a deal or a dud. A lot of stuff and cover there for you guys. Like I said, register now. If you go to noteweekend.com and get signed up tonight, I can get you a link out so you can start learning tomorrow and start getting ready prepared for the upcoming class for you guys. And if that's not enough, guys and gals, I will throw in some extra bonuses for you. Like I said, our class, one day is $99. If you want to attend, great. We will throw in also our 4 to 5 hour calling banks training. That's where you can listen to me make phone calls to banks via Zoom. You see who I'm calling, you hear what I'm saying, hear what they're saying. You're literally seeing a conversation as I dial 50 banks in roughly a 4 to 5 hour period. It's a great training. That's normally $49 to $59 itself. We throw that in. Okay. I'm going to give you the most recent Bauer financial list, which is like a $400 cost for you guys on the full list that you'll see and have that to be able to identify the banks, the different banks out there, that stuff that they're looking to get rid of. We'll also throw in a 30-minute phone call with me afterwards. So we can sit down and talk. Hey, is this a good fit for you? What do you want to focus on? Where do you want to go? I charge $1,000 an hour for consulting work. That's a $500 value for you guys. My time is valuable. And then also, guys, if you've got a spouse or business partner and you want them to attend, we throw them, it would allow them to attend at no additional cost. I said the replays are included. You get a 20-page manual. And then we also have a great private Facebook group with over 900 investors. It's a great way for you to network, to bounce ideas, ask questions. As you have deals, get people to look at it. People are selling deals on there. It is a great group. We've worked to build this over time, and that's worth a whole lot more than $100. But anyway, guys, like I said, it's over $1,000. I think it's over $1,500 in bonuses. All this thrown in, normally $99. We're going to drop this all down for the class. No nonsense fee, a little bit of skin in the game on your part to learn a whole lot of content for just $49. And I'll give you even one better thing. If you're going through this on Saturday and say, Scott, this is not for me. I don't think I've got the time. I'll gladly refund your money, no questions asked. Don't care. Trust me, I'm not retiring on $49. My goal is to build and create 1,000 note investors that I can feed deals to over the next 6, 12, 18, 24 months. Do I have another workshop? Yeah, I got a 3-day workshop. But I'm not one of these guys who's going to blow smoke up your ass. I'm going to give you plenty of good content and let you get rocking and rolling and dip your toes in the water, see if it's a good fit for you. Then we can talk about our 3-day workshop. Some people are often rock and rolling from just watching this, and that's a beautiful thing, ladies and gentlemen. So love for you to be a part of it. And whatever your goal is, I would love notes to help you achieve that. Like I said, whether you want to retire more, whether you want to spend more time with your spouse, want to put your kids through college, retire your parents, travel more, upgrade your toys, your house, whatever it might be, we all know it takes capital. Just doesn't have to be your capital. It can be the banks. It can be other people's money to help you tap into the tsunami of deals that we know are out there already hitting the books, already available for you guys if you want to dive into this. So you can be the note investor or you can be the borrower. You can be the bank who's always going to win or sit around scratching your head wishing you'd done more. So love for you guys to be a part of it. If you go to noteweekend.com, you can get signed up right now tonight for it, and we'll get your link out to you first thing in the morning so that you're ready for the class and all the other stuff that goes along with it. Otherwise, thank you guys. Any questions out there that I answer for you before we let you go this evening? Yes, you can find mobile home loans. There's lenders that are lending on that, whether it's mobile home parks or individuals or lots. definitely gonna do that. I had somebody ask me that question last night when I was talking to an investor out in Arizona. So definitely, mobile homes is something. Affordable housing is something that people are looking for. So great stuff, everybody. Thank you so much. Hope you have a great rest of your evening. Hopefully, we'll see you this Saturday at our Note Weekend class. Be safe out there, everybody, and we'll see you off the top.